It's time for bookkeeping, beer, and BS. Here's how the math actually works when you think because, like, I was talking to a guy today and he's like, I'm gonna make way too much money this year. I gotta start, like, I don't have time right now, but before the end of the year I gotta go buy something big. And I'm just like, go do your jobs, go make a bunch of money, and then let's talk about this before you go buy something stupid. With cash, not finance, straight cash type of thing, because I need to burn this cash so I don't have to give it to the government. One thing is, when you buy an asset, you don't get to expense it all in year one. There's a 179 deduction that was under Trump's tax law, which basically said in year one for small businesses, like if you spent less than $1 million on equipment, which generally we do, then you could expense it all in year one. Trump's tax law is going away, right? I assume, I don't know for sure, but I assume that deduction is going away. Which brings us back into like normal depreciation. So let's do it the easy way. I'm going to say a $50,000 asset, truck, whatever. Dudes love their trucks. So let's say a truck. If you're going to go buy a $50,000 asset, you're not going to get to expense all of that in year one anyway. You're going to expense, and it's not like straight line depreciation, but for math's sake, let's say it's straight line depreciation, which would mean you get to expense a fifth of it this year. So really you would get an expense of like $10,000, not all $50,000, right? Because you're expensing it over the course of 5 years. They use what's called Macker's depreciation, which is like an accelerated depreciation. I'm not going to get into all that, but point being is you don't get to expense it all in year one anyway. So it's not like you have a $50,000 expense. You really have like around a $10,000 expense, just saying for simple math's sake. Now, when you expense something, yes, you're reducing your income by like $10,000. But you also, assuming you were going to buy that truck next year, right? Like if you needed a truck and you were going to buy a $50,000 truck next year instead of this year, all that you really did was move $10,000 of expenses from next year to this year. So you really only get the time value difference of $10,000. Because the $10,000 is going to hit next year anyway, rather than this year. So the time value difference of $10,000 of cash this year versus next year with like an 8% interest rate is like $800, right?
I had two questions off that then. One, actually, we have two different clients that sell equipment, primarily B2B, they have e-commerce sites. And we have like every year, there's email blasts that go out that say, IRS section 179, spend, save now. Just a reminder to business owners, buy some stuff. And those tend to be among the most significantly impactful email blasts of the year.
Oh, yeah. If you're selling equipment, you're like, oh, you got to buy, like, all signs. And this is
we go right after Black, like, because they also have, both these places have Black Friday deals too. So it's like, let the Black Friday stuff settle out. And then a couple days after that, we're like, start with this section 179 stuff. Are you saying that's going away forever and we should like cancel those email blasts in 2 weeks? Or
I don't know if it is or not. I'm not saying I'm like the tax expert. I'm just saying that was a very Republican conservative style approach to depreciation and expediting those expenses. I don't know if Biden will take them away or not.
And that's the other thing is my totally layman understanding was that people were often making those decisions based on forecasting about changing political shit.
Yeah. Like if you knew 179 deductions were going away, and like I said, maybe they are, I don't know. If you knew they were going away next year, you'd be like, well, I'm going to fucking buy everything this year, right? Like I'm going to buy everything and expense everything right now. But even still, like I said, the true value. So I'm even gonna back it up one step. Just this is just like for mathematics sake, so you understand that it's not even if it's a 179 deduction, it's not as big of a deal as you think it is. So if it's a $50,000 truck, and I'm gonna go back to the depreciation example, and then I'll get out my calculator and we can do it as if it's $50,000. But if it's $10,000, that's actually gonna get expensed this year. When you expense something, it's not like you actually save that in taxes, right? Like your tax rate is your personal income tax rate for a small business owner. So let's say 25, 30%, like incremental. That's the last thing that gets taxed. So 30%, I'm just going to say for shits and grins. So you're not saving $10,000, you're saving $3,000. And because you would have bought that truck next year, all that's really happening is you're saving $3,000 right now instead of $3,000 next year. So if you took that $3,000 that you just saved right now and invested it at 8% returns or whatever it is, 20% returns, because you're a small business owner and you're going to reinvest it in yourself, you're going to make $600. You bought a $50,000 truck to make $600 because you were going to buy it next year anyway. Now, like if you got to 179 it and expense it all in year one, still the same decision, right? Like I'm either going to do $50,000 of expenses this year or next year, and $50,000 worth of tax expense is really $15,000 worth of savings. And so $15,000 worth of savings this year versus $15,000 worth of savings next year, reinvested at whatever percent return is like a couple $1,000. I mean, it's significant enough. Like I'd rather have a couple $1,000 now versus later type of thing. But it's not, you're not saving $50,000. Like you're still spending money, and a smart business owner would say, again, that equipment doesn't make shit without the guy and without the customer. So if you're going to go spend $50,000, cool, go spend $50,000, but don't spend it on a truck that's just going to stay parked all winter anyway. Like if you're running snow plows and stuff like that, like, yeah, go buy it because you actually need it to run your shit. But if you're just spending the money to save on taxes, go spend it on marketing. Go hire Nick or Paul to actually have somebody do marketing for you that's going to provide a way better return next year than saving 15% on your taxes.
And business owners make the opposite decision sometimes because it just feels like it
because somebody sends an email that says 179 deduction, buy some shit, and they're like, oh yeah, and I mean,
does it feel like getting ahead on your taxes? Like, doesn't it feel like I'm not going to be behind the 8 ball next quarter or whatever if I do this? Is that?
They're like, we just all have this huge aversion to paying taxes, and there's this like to the extent that we'll justify not paying taxes by like losing in our business. We'll make shitty business decisions to avoid paying taxes because we just don't want to pay taxes, when in reality, paying taxes is just a function of winning. Like the more you kick ass, the more taxes you're going to have to pay. And that's okay because you just made a whole shitload of money that affords you to pay the taxes. Like, yes, we want to pay as little as possible, but we take it too far because we don't actually do the math. And it's like common practice to just say like, go buy some shit at the end of the year. Right now, if you're in a multi-million dollar company, you're going to go buy a whole bunch of assets. And so like that shit adds up. But for the small business owner that's just going to go buy a $50,000 piece of equipment here and a $100,000 piece of equipment there, it doesn't move the needle enough. If you're a farmer and you're buying a $500,000 piece of equipment or $1 million piece of equipment, like now it starts to matter. That's like a big enough chunk of change, and they're going to finance the whole thing, but they're going to get the expense of the depreciation because they own it. So it's going to make sense for farmers. But for small business owners that are just like, we're generally using it as an excuse to buy a new truck is what we do. Like we like our toys, we like our fancy truck. And so we use an excuse to do that rather than do something that's smart for our business.